Welcome, ladies and gentlemen, here out of our studios in Munich, Commodity TV, and with me here is the founder and CEO, Amir Adnani of Uranium Energy Corporation. You remember we were talking to him already during the PDAC in Toronto some approximately 6-8 weeks ago, but there's so much going on in the uranium market, so we want to talk about some macro data, of course, and we want to get an insight from him into the markets, what's going on. Amir, welcome.
Hey, good to reconnect. A lot has happened.
Absolutely. Great to have you here in our studios. And of course, a lot is going on in the uranium markets. It looks like that it's really narrowing to me. And now we have on the 15th May, I think it's a Duma decision about an export ban to the US for uranium. So maybe you can elaborate a bit on all those movements. I know it's pure speculation, but we want to get your thoughts as you are really inside the markets, right?
For sure, and I think it's important to step back for a second, and before we talk about these recent events, to recall that 2017 ended on a very positive note for the uranium sector, because on the pure fundamentals, we really turned a corner by the very sort of meaningful supply cuts, production cuts that we saw get announced. And what that basically kind of really underscores is that most uranium mines in the world today can't make money at $20 per pound. Just the other day, there was a headline that nuclear energy is at a 25-year high when it comes to growth. Okay, the need for clean, reliable electricity is driving this unprecedented growth in nuclear power worldwide, and demand for uranium is increasing and growing on the back of that. So the supply equation does not add up for it to be diminishing each year due to the low price. And so fundamentally, things have turned a corner. But as we enter the month of April, we've definitely seen some political headwinds. And, as the saying goes, all roads seem to be kind of heading towards Moscow. And there's been a lot of back and forth between the White House and the Kremlin about sanctions and counter-sanctions, and uranium kind of getting caught up in some of that. And so I think what you were alluding to, which is a real risk when you consider it, is this draft bill that has been introduced into the Russian parliament, or Duma, and that is expected to be voted on somewhere around May 15th as to whether the Russians want to implement some kind of export halt of nuclear fuel and uranium to the US market. Of course, Russia is a significant supplier of uranium and nuclear fuel to the U.S. market, so that could really shake things up.
I think Russia alone is like 24% of all imports in the U.S., right?
Well, and it's really a combination of both uranium and conversion and enrichment that ends up getting added up. But when you kind of look at the supply of uranium going into the U.S. market, Russia and countries that kind of fall within closer proximity to Russia, Kazakhstan, Uzbekistan, make up just over 40% of supplies going into the U.S. market. So you factor that in along with what is happening in the U.S. side of the equation, with the Trump administration being very focused on various measures around the 232 petition and what they've done in steel and aluminum that I think a lot of people are paying attention to with tariffs there, and wanting to prioritize, because of national security grounds and concerns, what the U.S. uranium market looks like, and how they want to look to, in effect, turn around the fact that the U.S. is too over-dependent on foreign imports right now. So I think you have a lot of kind of geopolitical tension on top of what is otherwise positive supply-demand fundamentals turning in favor of the uranium market.
Oh, fantastic. Wow. So as far as I know, I think on the 15th May is a decision in the Duma. Let's do some speculation, I would love to, because you are so deep in the market. What do you think might happen if the Duma says, well, we do no longer export, let's say, for the next 3 to 6 months?
Boy,
will it be a shock on the market? Will uranium go immediately to $25 or $30?
Look, it's tough to speculate, and it's a complicated situation to say the least. If we look at, for example, what happened in the aluminum market just recently, when similar kind of complications were introduced with again the sanctions, you saw all of a sudden a very meaningful move in the aluminum prices. I think they were up 10% within a span of a week. And then, you know, as the talk around sanctions softens and hardens, the prices kind of move with that. So, I mean, I think clearly, as we've seen in some of the other commodities, these geopolitical events are in fact drivers of the commodity price, and they can have an effect. So let's wait and see. I mean, again, it's a lot of this in essence has frozen the market out right now. You know, in essence, the uranium market right now has become fairly inactive because buyers and sellers are waiting to see how this all pans out. So it's a very interesting.
Mikado, the first guy who moves loses, right?
Yeah, exactly. The first guy that you got it. Yeah. So look, it's I like to very much kind of think about where things are going to go longer term on the basis of more supply-demand fundamentals. Absolutely. But it would be also not feasible to completely ignore the recent geopolitical developments. They're serious, and there's something that you know, you need to pay attention to.
Yeah, absolutely. I think we must not really talk again about the company and the Hobson plant and all your fantastic work you did, because I think you played it absolutely right. But what I want to touch base a little bit, which I saw in your presentation just some hours ago, vanadium and titanium. I think this is something which is factored like with zero into your company value. But when I saw your presentation, I have the feeling, wow, there's a lot of meat on the bone.
Well, I think so much of our company and our strategy is centered around our in-situ recovery projects, and rightfully so, because they are the projects that we're going to put the bulk of our focus and attention on initially to move towards production. Our project base in South Texas and in Wyoming, where we have fully permitted assets, where we have the Hobson processing plant, and where combined with the physical capacity at Hobson for 2 million pounds and our license at Reno Creek, which is another 2 million pound license, you see the foundation for a company that can become a 4 million pound per year, low-cost in-situ recovery producer and really lead U.S. production higher. That's what grabs your attention, I think, when you look at the company. But you're right, and what's happening now is that with vanadium prices moving and vanadium prices being at a 3 or 4 year high, looking very good, we have a couple of main conventional projects in our portfolio where there's significant vanadium resources associated with our uranium project. This is mainly our Slick Rock project in Colorado, and to some extent
also in the U.S., right?
These are U.S. projects in Colorado and Arizona. These are projects that we have 43-101 or compliant resources and preliminary economic assessment completed on the economic viability of the project. So again, we don't talk a lot about it, but these could arguably be company makers, where inside a company, these could be the assets that you could see someone focus on with uranium and vanadium. So yes, indeed, it's interesting now at a time of rising vanadium prices to pay attention to this part of the equation, the vanadium resources that are really never been part of our discussions. I don't think you and I have ever talked about it. And equally so for titanium, you know, very similar situation where's
the titanium project located?
So the titanium project, our Alto Parana project, is in Paraguay, and we've been in the country of Paraguay since 2012 with our uranium projects there. We've gotten to know the country well, established an understanding and network there. And this is a very well-known project, and in 2015 we acquired an option on it because we just saw a real bargain opportunity when there was a crash in the base metal complex, including in titanium prices. Recently, there's been a really nice recovery in that sector as well, titanium prices, and ilmenite, which is the feedstock for titanium, was at a 2-year high. So that also now puts us in a position where the resource that we have issued on that project now, we've exercised the option, we issued a 43-101 resource.
How large is the resource?
It's about 4.9 billion tons of titanium oxide. So it's a very large, high-grade resource, 43-101 resource.
That's like whatever, what a 50-year production or whatever.
I mean,
I don't know.
We would, you know, that
like.
that would be defined as we do more economic work and analysis on it. But it's one of the largest deposits at a development stage in the world, and so it's meaningful. But as these commodity plays always go. It's a function of where in the cycle you are. So now, in the last 6 months, we've seen some supply disruptions in the titanium market. Rio Tinto, for example, has put the production at their Richards Bay mine, which is almost 25% of global supply, on hold because of issues there with labor disputes and other factors. So you also, again, have a market there that's starting to really get tight on the supply side. You're seeing upward pressure on the prices for the feedstock for titanium and titanium oxide. And here is UEC controlling 100% of a very large, long mine life resource that, again, we hardly talk about, and it's really secondary to our main focus. But these so-called secondary assets, whether it's titanium or vanadium, are now growing in value. And as they grow in value, they become a little bit hard to ignore. And at the right time, our focus really would be to perhaps monetize the titanium project.
I mean, you can sell, or you say you put in Rio Tinto as a partner, or BHP or whatever, I don't know.
Look, at the end of the day, our focus is on uranium, and our focus is really in leading U.S. production higher with low-cost in-situ recovery. And we're, at the end of the day, also a very entrepreneurial company. And I think the market and our investor base has come to really appreciate how we have thought outside the box and have been entrepreneurial and flexible when we thought there was a way to create long-term shareholder value. And something like what we've acquired in titanium is a great way to demonstrate that. While it's not our core focus, titanium, we saw a good business opportunity, leveraged our expertise in the country, in Paraguay, and now have a situation that I think the value we're going to unlock could be meaningful to UEC and UEC shareholders. And it would help us advance our uranium objectives that much more aggressively and with that much more firepower.
And it gives you fantastic optionality.
And exactly. And look, depending on how it develops, I mean, we may see that it's developing in a very attractive way and maintain some kind of equity ownership or ownership in the project. We may not decide to sell all of it, right?
I mean, NSR or whatever.
Exactly.
Just participate in the future.
Participate in the future, and if it's if it turns out to be what we, today it looks to be the type of asset which truly has the potential to be a generational asset, a real long-term play, and that could be a great cornerstone situation for UEC to retain interest in, again, whether it's a royalty or it's some kind of equity interest, as we sell our interest down or potentially IPO or joint venture the asset. There's a lot of ways for us to maintain a stake in it moving forward, which goes to show that we really believe in it as well, and see some really strong potential in it.
Fantastic. It was a perfect closing sentence, I would say. Thank you very much, Amir. And I think we have some interesting weeks in front of us with the markets and with the uranium especially. And let's see what comes out.
Thank you.
All the best for the company. Thank you very much. Ladies and gentlemen, it was Amir Adnani, the CEO and founder of Uranium Energy Corporation. And you heard it, the guys did a fantastic job on the uranium projects, on the Hobson plant, and they are ready for takeoff. When uranium prices take off, it takes approximately 2, 3, maybe 4 months to put the key on, switch on, and really to restart uranium production. But don't forget, vanadium and titanium is coming now into the play. They have 2 fantastic projects, one in the US, one in Paraguay. And I think this is an optionality for the future. And as he said, a real good cornerstone chance and situation for the company. So check it out. Thanks for watching us, and stay tuned to the uranium announcements out of Russia. It might be an interesting bumpy road. Thanks. Bye-bye from Munich.